Right, our next caller, Soma Shekhar, is calling in from Bengaluru. Soma, a very good morning to you. How can we help you?
Yeah, good morning. I'm Somshekar from Bengaluru, short-term trader.
Okay.
I need advice on buying BHEL because it has come down. Whether it's the right time to buy it?
Okay, I'll take this up with Vikas. Vikas, for BHEL, what do you think? Are the charts indicating a buy right now?
Yeah, the stock has witnessed some 5% correction along with the broader markets. And now it is been at near to support area of 215, 218 levels, which is a band of the averages. No doubt there was some amount of negative news flow for fired without it one of its plant. But the stock has not reacted through. So with this major broader market corrective action and the stock down by 4%, it gives a good opportunity to own the name. So we can invest near to those 215, 218 levels. On the higher side, the first immediate target will be near to 240 to 45, which is the 200-day average.
All right. So the next question is from Revati, who's writing in from Madanapalli and asking about Waaree Energies, bought during the IPO and trading with gains at this juncture. And well, it's down about 3%, but it moved quite dramatically over the course of the last couple of days. The question is about valuations and where they're whether they're a little stretched at this point. Some people definitely think so. Samir, I'm wondering whether you are one of them.
Yes, unfortunately, I think the valuations are a little stretched. Look, what's happened is they've had a phenomenal year this year because of the growth of the new capacities that came on. Now, that is not going to keep repeating. So I'm just giving you a simple example. When you go from say 4 million to 8 million, you're doubling yourself, right? So you have huge growth opportunity that comes up in the top line and the profitability because of the operational leverage. Now, I'm not denying when you go from 8 to 12 also, the operating leverage is still there, but the growth is not 100% anymore. It's come down to 50%. And now Waaree is sitting on quite a large base, right? So whatever further expansions they're going to be doing, yes, it's going to be meaningful, but it's not going to be as meaningful as before. So growth is not going to look as strong. And then you're not going to see the profits growing as much. So then the premium valuations of about 45 times current year earnings seems a bit expensive. We believe but actually, if you go look at it, everyone is trading around similar levels, be it Suzlon, be it KPI Green, be it Sterling and Wilson. You can't really take the valuation because they've just about turned into profits this year, and the operational leverage is still to play out. But they're all trading at this. But the point is that Waaree Energies also makes these solar cells, which they export. And US, there are two things. One, the import duty that's come, that's going to hurt them a little bit. Is it going to benefit because China is paying more? Probably in the short term, yes. But what is also, second thing that's happened is Donald Trump is not pushing renewable energy in the same way that the Democrats were. So what is going to happen if incentives for setting up renewable energy from the US government go down and that growth does not happen in the same manner, then Waaree can see some amount of lower growth in volumes, and that could also affect. So I'm not as convinced on a Waaree Energy at this point of time. If you want to make a play in the solar energy space, the two stocks that we are invested in and we like, one is KPI Green, which sets up the solar parks within India for themselves through IPP and CPPs for other customers as well. And there's Sterling and Wilson Solar, which is part of the Reliance Group. There was a question in the show earlier of whether you should hold on. Fundamentally, I'm very convinced that the quarterly numbers that came were very good. The top line showed growth. Their order book is at 9,000 crores. We believe they will be able to do well over the next couple of years. Yet we haven't seen any real orders coming in from the Reliance table. Once Reliance places orders for their solar plants, I think the opportunity, their growth numbers will see further acceleration. The operating leverage is coming through, and you're getting the stock at a very reasonable price. This is a stock that traded at 800 rupees, which is down to about 310 right now, and had gone down to 220. So this is a chance to buy into a long-term investment. Yes, short-term, you might see volatility, you might see the stock going down again to 280. But for me, these are the two plays that we would make in the green energy space at this point.
Sterling and Wilson at lower circuit at this juncture. Samir, there's a very insistent crow outside your window that seems to be very happy to join us on today's program. Okay, let me take the next caller. Murli is calling us from Bengaluru. Hi, Murli. How can we help you today?
Good morning, and thank you for taking up my query.
My pleasure.
Yeah, I bought a Canfin Homes, 500 shares,
yes,
at 745 for 799 rupees.
Right.
Now, in spite of good results, I don't know why it is coming down. Not generally market trend, even otherwise it was coming down. Instead of highest stable quarterly profit, all under control.
Yeah.
Can I switch over? Can I retain, continue to hold, or switch over to Canara Bank?
Canara Bank. All right. And you've got a long-term view on this one, Murli?
Yeah.
Okay.
Yeah,
It's an
yeah.
interesting question. All right. We did look at the numbers. Canfin Homes. Samir, since this is a fundamental question, I'm coming back to you. Numbers weren't bad. My only question is, while the entire system is seeing a little bit of an anemic kind of a loan growth phase, in that context, there are a couple of entities that are growing faster than others. We already discussed Bajaj Housing Finance, but then valuations are a bit maybe uncomfortable for a few people. In that context, Canfin Homes was being suggested as a top pick by a few brokerages. I don't know what you think. $7.99 is a buy price. Would you switch over to something like a Canara Bank?
So that, look, if you're buying Canara Bank is not exactly a only pure securitized lending business. It has banking operations and all of that, which I always prefer from growth opportunity, because they have multiple sectors to look at, and they can ensure that if one segment, for example, I'm just giving, say, housing were to slow down, they can focus on other spaces to grow their loan book, whereas a Canfin Homes has to focus on the housing and then maybe even look at, to increase their spread, because it's a very competitive space. Look at giving developer loans. And developer loans is where the big pain point lies. So if you're asking between a switch, Canara Bank is obviously a better bet than a Canfin Homes at this point of time. But housing finance is a very secure portfolio. So that is the beauty of it. As Canfin Homes has been able to grow at a very decent pace and been profitable over this growth. They really haven't had too many hiccups. They maybe had one maybe in the last 3 years, if I can remember. But barring which, I think they've had a very relatively clean go ahead. Whereas LIC Housing Finance has also been growing, but in a similar, it's again a PSU kind of a housing finance company. But they've had more hiccups along the way with certain corporates turning default or certain developer loans not working, their margins not being able to maintain over a period of time. They've been having fluctuations. So Canfin has actually done a very good job. So if you want to stay invested, I think you can stay invested from a housing if you are looking at a pure housing finance. If you are not hell-bent on a housing finance, then you can obviously look at Canara Bank, because I think banking operations are great. And they can scale up quite quickly. So the call eventually has to be what you want to do. But yes, Canfin is a good hold-on opportunity if you have interest in housing finance.